Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's continue our journey with the euro currency. So it was really interesting weekly report that we have prepared because we talked about the fundamental background, the new feature of the Fed policy in a modern economy life of the United States, and we come to the conclusion that probably it is bit anticipated action to support the moderate economy pace as longer as possible. So this is not some struggle with inflation or some preventing of the recession. This is just single injections in a necessary moment to keep current pace of the economy. And from that standpoint, in the longer term perspective, we said that probably should be positive for the United States economy because it just provides good statistics, or as relative statistics to situation in the European Union, for example, as absolute statistics. So this probably will be some acceptable gross domestic product data, some consumption, retail sales, and so on. So in the longer term perspective, that is should be dollar supportive. But in the shorter term, as we can see from the recent statement from Jerome Powell on Friday, that could lead to some significant pullbacks against the dollar because by itself the rate cut is the dovish measure, and it's reduced the value of the currency in particular moment, and that's what we see right now on the market. And on weekend we have we considered two possible scenarios. The first one you could see here on the daily chart. The alternative scenario, if the result of this recent statement of the Fed will be short-term and market will not proceed higher with this scenario and turning down, taking out of these lows, that will be an alternative scenario with the butterfly. But now we will focus on the first scenario just because market still keeps it valid, and it is too early to speak about the possible bearish reversal. Now we need to finish with the first scenario that we have. So what we actually have from the technical point of view, from the technical moment, we have bullish reversal session on Friday. So the market creates the new lows and closes above the top of the previous candle, but mostly it has engulfed almost the 2-week action here with this upward action. It's a reversal session. Usually it has the continuation. Trend has turned bullish, and even with this recent retracement, we have not any grabbers. The May I will show you, keeps this retracement, so you can see the lines are bullish. So this retracement has not broken the trend, and we consider currently the upward extension of this A, B, C bottom pattern. Potentially we are ready to talk about the 1264. It's completion of this A, B, C, D pattern, which also coincides with the monthly pivot resistance 1 and major 618 resistance in 1264. That is our ultimate targets. This market maybe will hit, but we also consider tighter, closer extension, 618 minor extension. So if market will not be able to proceed higher right to this point, maybe market will complete closer trade. So currently we are watching for possible upward continuation here. On the 4-hour time frame chart, you could see this target. So we have this A, B, C bottom. Upward action has started. Retracement. The COP of this large pattern will be around 112 area. So also, if you consider this minor A, B, C bottom, you will see that OP will stand slightly above it. It mostly agrees with the 112 area as well. So that's the target that we're watching for. Currently, market stands at a very tricky moment, guys, and if it will not be able to hold here, this will be really big points in favor of the bears. Why? First of all, we have very good thrusting action. We have good rally on Friday. So the Jerome Powell provides good upside impulse, upside momentum for the market. And if market will not be able to use it and proceed higher, this will mean that something is wrong with the overall sentiment, overall positions, and most traders use this rally for selling. Here's why. So on the hourly chart, if you remember, we talked about this area as a potential level where we could take the position. So actually we said first above the 30%. As you can see, here was some consolidation. Market was trying to push higher, but was not able to. Starting upward action, dropped a bit lower, right to the 618, 50% support. So, but this is 111 area that we have specified. In our weekly reports, 111, 111, 15. That was our range where we agreed to take a look at the possible position taking. So now market stands in the strong support. You can see this is, first of all, natural support area that protects this consolidation. The market stands previously. So it was resistance, it was breakout, now it will be support. That is an XOP target of this initial A, B, C top pattern, XOP, which mostly creates an agreement for the 618 support, is 111. So by the retracement framework, everything is done already. So market has completed downward extension right at the major support. So retracement should be over. So market here, is, if it is indeed bullish, it should re-establish upward action. If it will not do this and will drop below the 618, erasing this rally, that will be a very bad sign. And in this case, we probably will turn to the bearish scenario faster than we thought initially. So in this case, we again will have to turn to the daily and start to consider the butterfly. This will be left wing of the butterfly, that's right wing, and with the downward extension. Because on the dollar index, guys, it's also an interesting situation. So take a look. Recall the sell-off on the Friday. What is going on right now? Take a look. With this retracement, market is retested this consolidation right at the top. So, and if we're really stands in this against the dollar, so market should turn down. If it returns right back up in this consolidation, it means that it will be able at least to reach the opposite border of the consolidation, but it also will be bullish sign for the dollar, and it could be greater upward continuation. So market by this action will erase all Friday collapse, and it will mean that the sentiment doesn't support, overall market view doesn't support the weakness of the dollar currently, despite the statement of the Jerome Powell. That's why this support area on the dollar index, this is resistance, on the euro currency this is support. This support area is critically important for the market. And today we will see what will happen. So if you have taken the long position here around this area, once market will start upward action, you could try to use the break-even stop order. So tight your stop to the break-even as soon as possible. Because you can see the situation is very tricky, and currently overall market reaction doesn't look too strong. So maybe today, later in the session, situation could change, but currently, yes, we see a response, we see respect, but it is not very strong by far. So we need to keep watching what will happen. So if you have the bearish view, you should wait at least for the breakout of this support area. So if market will break it, then it will be easier to the market to continue move lower, because it returns back in this range of this consolidation, and its range will become open again. So currently market stands still stands aside because it is protected by the natural support area that stands in this level. So that's our view on the euro. So let's keep watching what will happen today.